Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Csc Financial Co. Limited annual report. Csc Financial Co. Limited offers a wide range of financial services to its clients globally. At the core of their operations are investment banking services, which include securities brokerage, underwriting, and sponsoring. They also provide wealth management services, such as proprietary trading and investment of securities, as well as asset management. In addition to these primary services, Csc Financial Co. Limited offers a variety of specialized services. These include custodian services for securities investment funds, market-making trading business of listed securities, and sale of precious metal products. They also provide commodity futures brokerage, financial futures brokerage, and equity investment and corporate management services. Furthermore, the company offers various advisory services, including investment consulting, project consulting, and research and advisory services. They also engage in private placement offerings and related services, as well as equity and debt financing for clients. Additionally, they offer brokerage agency services for trading of equity stocks, funds, bonds, and futures. Overall, Csc Financial Co. Limited's diverse range of services makes it a comprehensive financial solutions provider to its clients worldwide. Csc Financial Co. Limited market capitalization of $82 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Csc Financial Co. Limited holds a significant advantage in their industry. Csc Financial Co. Limited trades at a lower price-to-earnings ratio of 9 times and a higher price-to-book ratio of 0.88 times relative within the industry. This suggests a potential market detachment, as Csc Financial Co. Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The company exhibits a very high leverage profile, with liabilities accounting for 81% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.41%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a financial institution can be attributed to several key factors. Firstly, the investment banking business segment has seen a significant increase in revenue, with a 22.41% year-over-year (YoY) rise. This is largely due to the success of equity financing projects, which have seen a 15.91% YoY increase in the number of projects issued and a staggering 308.26% YoY increase in funds raised. The wealth management business segment has also contributed to revenue growth, with a 20.53% YoY increase in revenue. This can be attributed to the expansion of diversified networks of foreign clients, as well as the advancement of research business and trading system functionalities. Additionally, the digital transformation of the business has enabled the company to tap into new markets and increase its reach. Cross-border integrated presence has also played a significant role in driving revenue growth, with policy support for industry and capital markets further contributing to this trend. The expansion of Chinese mainland high-net-worth clients and institutional funds has also been a key driver of growth, as has the increase in assets under management, AUM, of various funds. On the other hand, revenue decline can be attributed to several factors. Volatility in domestic equity markets has had a negative impact on revenue, while the China capital segment has seen a significant 68% revenue decline. Additionally, net investment gains from institutional investment wealth client asset management have decreased by 4.5%. The financial performance of a company has shown significant improvement in recent years. A notable increase in net income was observed, with the international business segment experiencing a growth of over 100% year-over-year. This surge can be attributed to various factors, including investments in information technology that contributed $694.2857 million to the overall net income. The company's profit margins have also seen an upward trend, increasing by 2.29 percentage points to reach 10.53%. This improvement is a positive indicator of the company's ability to manage costs and maintain competitiveness in the market. The overall increase in net income attributable to equity holders of the parent company further underscores the company's financial stability and growth prospects. The company's financial performance indicates a strong ability to generate cash from its core operations. One key indicator of this is the positive operating cash flow, which has been consistently maintained over the past 2 years. In 2025, the company generated RMB 42,720 million in net cash flow from operating activities, demonstrating a significant increase from the previous year. This positive trend is further supported by the fact that the net cash inflow from operating activities exceeded the net cash outflow from investing activities, resulting in an increase of RMB 8,213 million in cash and bank balances. This suggests that the company's operations are generating sufficient cash to not only cover its investments, but also build up its reserves. Overall, the data indicates a strong financial position for the company, with positive operating cash flow serving as a key indicator of its ability to sustain itself financially. The company's debt level has undergone significant changes over the past few years. According to the extracted summaries, total domestic debt financing business increased by 16% from RMB 111,255.27 million to RMB 129,729.82 million. Additionally, total liabilities increased by 21.26% in 2 separate instances, one on page 63 and another on page 74. Furthermore, the company's financial liabilities skyrocketed by 977.6% from RMB 75,924,796,000. The total debt also saw a substantial increase from RMB 38,450,587 to RMB 116,065,421. On the other hand, interest expenses have fluctuated significantly. While there were instances of decrease, such as on page 67 and page 227, where interest expenses decreased by RMB 136 million, 1.72%, YoY and RMB 135,956 respectively, there were also instances of increase. For example, on page 190, interest expenses increased by 12.1% from RMB 4,776,805,000. The company's interest expenses have been inconsistent, with some periods showing a decrease and others an increase. The company's performance can be analyzed by examining its various business segments. The investment banking sector has been performing well, as indicated on page 5. Additionally, the asset management business and institutional business have also shown strong results, with positive mentions on pages 224 and 225. On the other hand, some segments have underperformed. The commodity trading and treasury function, categorized under Other, have struggled, page 224. Similarly, Wealth Client Services segment has also seen poor performance, page 224. While trading and institutional banking reported a relatively low operating profit compared to other segments, page 225, investment wealth management services showed high revenue and operating profit, but its status as a well-performing segment is unclear. Management is emphasizing the importance of prudent financial management in their strategy. They are maintaining sufficient collateral levels to mitigate risk, conducting rigorous risk assessments, and meeting strict credit rating criteria before making investments. The company has also planned its assets and liabilities based on development strategy and market environment, ensuring a reasonable debt maturity structure and sufficient liquidity reserve. Management is confident that they have a sound risk management organizational structure in place, which effectively controls market risks within various limit indicators. They are also making ongoing efforts to improve their proprietary business management system. Overall, the company's focus is on managing credit risk, maintaining regulatory compliance, and ensuring reasonable investment returns through prudent financial management and effective risk assessment. The company's financial reports clearly indicate that it has a history of paying dividends to its shareholders. On page 4, it is stated that the company paid out RMB 12.56 billion in dividends. This is further reinforced on page 96, where it is mentioned that the company has indeed paid cash dividends. Additionally, pages 218 and 235 confirm this by stating dividends. Yes, and providing a specific amount of RMB 559,709 paid out as dividends in 2025, respectively. The consistency across multiple pages suggests that paying dividends is a regular practice for the company, indicating its commitment to returning value to its shareholders. That concludes the financial summary for Csc Financial Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.